What do you think is going to be the outcome for maybe the on-chain economy this year? How big is it going to become?
That's the question I always love to ask at the RWA Summit.
You ask other people that? What are the answers you hear? Yeah.
Oh my gosh, everything. McKinsey says it's going to be $3 trillion by 2030. BCG says it's going to be $30 trillion by 2030. So definitely a number with a T.
There we go.
It's a matter of how many T's and a lot of the interest that we're seeing from banks and fintechs and traditional players is...
I am excited to introduce today's guest as Bhaji Illuminati, the former CMO, now CEO of Centrifuge. If you don't know Centrifuge, it is a platform focused on providing on-chain finance to asset managers and investors. It has over 670 million in total assets financed across over 1,600 different tokenized assets. It works with companies like Circle, Base, Arbitrum, and more. And starting off, Bhaji, I'm excited to have you on, and congrats on the new CEO appointment. How do you feel?
Thank you so much. I feel good. And this is my first time saying it to the public. So
introduce yourself. Yeah. You are the CEO. Yeah.
I'm the CEO of Centrifuge.
Wow.
It's been a kind of low, gradual transition since I started. So I joined as CMO 2 years ago. My first foray into Web3 was brought in because of my experience in Web2. So selling complicated technology products into antiquated industries and creating new categories, simplifying complex topics, and making these niche products more globally accessible to the customers we sell to.
Mm-hmm.
So not the typical journey that you see oftentimes into crypto, but a lot of that strength of what had worked for me in Web2 is exactly what we needed at the time that I joined Centrifuge.
Mm-hmm.
And I knew the team from the previous company they had founded, Talia, is where I spent the first 5 years of my career working really closely with the founding team and building that category alongside them. So then they tapped me, they said, come over, let's do it again at Centrifuge. So the past 2 years, started as chief marketing officer. About a year, just over a year ago, took on interim head of sales as well. So started running the full go-to-market function. And then in July, started as interim CEO, working really closely with Lucas, who is our previous CEO, who's been incredible during this transition, still a very strategic part of the work that we're doing, still a board member, very actively involved on the strategy side. But ultimately, what we realized is that the stage we're at now really needs focus to break us out of just the crypto rails. So how are we bridging this gap between on-chain finance and DeFi and traditional capital markets? How are we taking this very complicated technology that's been so technical in nature of how we talk about it, how we bring it to market, and how are we making it more accessible to asset managers, to banks, to fintechs, to the retail audience and consumers more generally? So the really exciting and fun work we have ahead is a lot of education, a lot of marketing, a lot of category creation, a lot of legitimizing all of the work that we've been doing and acting as the platform where we can help bring this next wave of users and partners and massive adopters, both on the institutional and retail side, on chain. So it's very exciting. Not doing it alone, obviously. We have a very incredible team. As part of the CEO announcement, we are also announcing Anil Sood, who has been in our ecosystem for 7-8 months now as a founder of Anemoy, which is an asset management partner. He's joining as chief strategy and growth officer. So he has an incredible background in ETFs and really deep relationships within ETF capital markets, a really interesting focus of how tokenization can really transform the ETF industry. So we're really building out that function and that strategy as well. So really an evolution of the leadership team where we're putting key people in place who can help with focus and growth in these key areas that will help take us to the next level.
Yeah, we got to bring him on the pod too. He's got to come on and talk about that.
I know. He's any day now, he is expecting twins. Okay. And he's based in London. So he asks that we keep his nights open.
Fair. Yeah. Definitely next time after the kids are born, you could come on. But I think you maybe touched on this a bit, but I want to dive further into it about the leadership changes and kind of the strategy for the company from here on out. I feel like it is such a pivotal moment in the broader on-chain finance industry, as well as like real world assets, tokenization. I'm extremely excited about those sectors. I see a lot of promise in that area, especially for this year, given the new administration in the US and kind of the conversations that are happening here. How does the leadership change for you, especially taking on the role of CEO? I know you said you were interim CEO, but like publicly announcing it and like moving into this role really change the strategy and the vision for you guys, or maybe like build on top of what you've already been doing?
Yeah, it very much builds on top of what we've been doing. So we were founded in 2017, one of the first projects to focus on real world assets, which is both a great thing and a challenging thing.
Right.
A great thing because we now have 7-8 years of experience and partnerships and knowledge of what works, what doesn't, institutional know-how on the legal and structural side that isn't something that anyone can jump into and catch on and build right away. Deep relationships with Maker and Aave and a lot of the major DeFi protocols. But a challenging thing because, we've gone through multiple cycles. We had moments where we felt like the institutions were coming and launching in 2017, we just weren't, the market just wasn't ready yet. The infrastructure wasn't ready, the education wasn't ready, the pieces hadn't fallen into place. So now
the pieces are in place.
The pieces are in place and the institutions are here. The regulatory tailwinds are behind us, and we're starting to see this real momentum and this real excitement. So what that means for our strategy is, over the past 7 years, it has really been focused on the technology, building the tokenization engine, building this on-chain fund management product, doing that all in a decentralized horizontal infrastructure where any asset manager can come in and launch a fund on Centrifuge. They can tokenize any asset. So we've done everything from music royalties to invoice financing to the kind of long tail esoteric stuff that's hard to access, all the way to now where the majority of the transactions in the volume we see is through tokenized treasuries, which has seen a really strong product market fit over the past 2 years. So that decentralized play is what we really truly believe will be the transformative technology of the future that will power the backbone of every asset manager, that will run behind the scenes, that people don't even know is on blockchain rails. They're just reaping the efficiencies and the cost savings and the benefit of that process. So that is what we've been focused on. And that is what will have the really long-term value and staying power. How we're evolving and growing the strategy this year and beyond is that we recognize a lot of these asset managers we're talking to, they're not ready to run these funds on their own. They don't have the system, the people, the resources in place to fully adopt the crypto rails within their organization. So they need an entry point. And how we're doing that is that we have an asset management partner called Anemoy. We spun it up in late 2023. It is a regulated fund out of the BVIs. It's where we have our tokenized T-bill offering, and we'll be bringing a few more funds in the next few months. And that's the stepping stone for TradFi into DeFi. So we just announced a partnership with Janus Henderson. They came on as a sub-advisor to an existing regulated fund, where what that means is that they don't have to do the startup costs. They don't have to fully build the team and the resources to dip their toes into the on-chain market. They can come in relatively low barrier to entry, manage an existing fund, get exposure to crypto, prove it out internally, and then ultimately have that be a proof of concept that enables them to grow their strategy. So looking forward, we'll continue to really verticalize that business where we're creating this regulated entity that acts as a Trojan horse to bring the TradFi world on chain. And then the third pillar that we're building out now and really focusing on is the distribution. So we've got Centrifuge, which is really focused on the technology, the underlying infrastructure, Anemoy focused on the vertically integrated asset manager. And then what's next? How do we get that out to market? So there's some really interesting partnerships and folks that we're working with on the distribution side, which are things like getting RWAs as collateral for every stablecoin, or creating a retail bank where consumers can access fixed income products and have this stable yield as a part of their portfolio. So we see that as the flywheel of growth that will really drive tokenization forward this year, where great technology brings asset managers, which launch interesting products, which brings in retail and community and more appeal on the TVL side, which then fuels the flywheel. So that's the kind of 2025 focus and how we've put the people in place and built the teams to enable that growth.
That makes a lot of sense. And I was thinking about what you were saying. It's like, these asset management firms and investors and institutional teams definitely want to get involved. Maybe not all of them, but we're starting to see this adoption, and it's not like they're experts. And like to build out a whole department and infrastructure, to your point, would take a lot of people, a lot of capital, and it might not even succeed. And so why wouldn't they just go and use, people who know how to do it and like have the resources, tools, etc., to literally create that like almost like a line where it's like what is that called? You know what I'm talking about, when like you're building something and it's like a assembly line. That's what I was getting at.
Exactly.
Assembly line. So this is like an assembly line then, right?
It really is. Yeah. And I mean, it's been interesting because like, if we look at 2024 as a turning point for tokenization, BlackRock was early with BUIDL. They launched the BUIDL fund. They quickly grew to 500 million. They're the biggest asset manager in the world. They proved to other asset managers that this is really meaningful technology that you should pay attention to. So that every other asset manager was like, oh, wow, I have to, move fast. And if BlackRock is doing this, I must be.
We got to be like BlackRock.
I'd be doing it too. So there was this interest in this conversation, and it came up, and they, it's bring it into their like focus and their strategy on the innovation side. But there wasn't that driver of why now until the Maker Grand Prix $1 billion RFP that came out, which was the first largest demand driver for real world assets that we've seen on chain. And there's real money there. So then that was the perfect complement to the growing excitement and interest and curiosity around tokenization, was that finally there's this demand driver, which can catalyze an actual move. So that's why now for Janus, for instance, one of our partners, is they realize, okay, there's meaningful capital on chain that can be allocated to these products. And this is an opportunity that we want to put forth a really strong bid for. So those were the building blocks that went into place in 2024. And then to pay on top of that, the new administration and some of the regulatory clarity we're seeing and the excitement coming out of the US, then that just gave everyone permission to really move forward and push the needle. So we're feeling very strong about the opportunity for tokenization and to really get a foothold in this cycle, and then to stay and to grow, hopefully uncorrelated to future cycles in crypto as we move forward, as it gets further penetration within actual TradFi and the traditional finance rails, to realize efficiencies and to start utilizing the technology in a more fundamental way.
I know you're no longer the CMO, but you definitely have the expertise on that front when it comes to marketing this technology to mainstream investors, more enterprise businesses, maybe like these asset managements, maybe not enterprise businesses, but asset managers for sure. How do you kind of look at it now compared to last year even? Like, given everything that we've just discussed, there has been a big shift. And I think there's also more demand and appetite. So maybe you're getting a lot of inbound, but still it's curiosity, not like 100% I need this. and then you might also be getting that too. But when you come to marketing this and strategizing growth and scaling it, how do you look at that, especially today compared to past cycles?
Yeah, it's been actually really fascinating to see how quickly the change has taken place. One of the early initiatives I spearheaded when joining Centrifuge was to launch a real world asset summit. So we hosted the first one in New York in 2023. And then it was a huge success. We did 5 last year. Mm-hmm. And what we do is they're application gated. We accept like 10, 15% of people that apply, very intentional with who's in the room, very senior level people who have a mandate towards tokenization. And then the conversations there can be more about not why, but how and what and when, and very actionable and practical. So the reason I bring that up is because 2023, that event was very heavily skewed towards DeFi. We had a ton of incredible crypto founders, a lot of really excited builders who really truly believe in the technology. Mm-hmm. Early events in 2024, so we started the year at Consensus. We saw like a healthier mix. We were starting to get some of the suits in the room. We were starting to get a better representation.
Yeah.
Yeah, exactly. We have so much fun with that.
Yeah.
Suits and the hoodies.
Yes.
The first event we did, we actually had we had people wearing sweatshirts over their suits and they took them off. So we're like, it's not one or the other. It's the combination of the two.
Right.
So then throughout the course of the year last year, we saw the split become more 50-50. And that to me was indicative of the growing appetite and interest from TradFi to be a part of these conversations and to really open their minds to this technology and how they can use it and actively contribute just as much to the conversation as they're getting. Mm-hmm. So from the marketing and community development side, that's a shift that's already happening where we need to be able to effectively communicate with the crypto audience, the builders, the developers, the visionaries, as well as the TradFi audience, the people who have been on Wall Street their entire career and oftentimes can be resistant to change. And it's, money that we're talking about, trillions of dollars that we're talking about. So you can't just make a spontaneous decision as it relates to the underlying assets in your fund. Mm-hmm. So the shift is about how we bring those two together and how we effectively communicate to both audiences. And then the real push going forward is further education. So recognizing things like the acronym RWA in TradFi means risk-weighted assets. So you're going
of course
and you're talking
it means something else, yeah.
Exactly. So they're like, just from the fundamental acronyms that we're using, they're scratching their head and they're saying, what are you guys talking about?
Right.
Like, come on. So that's why we've kind of made this shift to on-chain finance, started talking about tokenization more. But there's things like that, like protocol versus company or RWA versus tokenization. And just these slight nuances in how we communicate are first steps. But then bigger picture things, like a lot of people still don't really recognize that there's a difference between cryptocurrencies and Bitcoin and blockchain and the technology. So that's been a conversation, Bitcoin versus blockchain forever, but it is still true. I mean, you do still need to do that type of education as well. So that's a big part we'll always continue to play. And one of the things I've always been focused on at Centrifuge is that it's not just Centrifuge. So with the Real World Asset Summit, we had Circle, we had Coinbase, we had Galaxy, we had Arbitrum, we had tons of partners that care about this intersection of TradFi and DeFi come together to help create the content and drive the message forward. We also launched a coalition called the Tokenized Asset Coalition. And again, it's the goal is that it's not just Centrifuge who's pushing this message forward, but we're bringing together the key leaders in the industry who have a similar message and have a similar strategy and approach. And together we can have even greater of an impact of how we can bring this into traditional capital markets.
Yeah. I have so many thoughts on what you were saying. And I think one of the things that stuck to me was the way we refer to things in this industry. I saw the Trump administration put out like the executive order on crypto, and they used the term digital finance. And that's not something that people in crypto like ever say. But when I read it, I was like, it's so obvious. It's so easy. Like it makes sense. And even to your point, RWAs in crypto versus RWAs in TradFi, and even just calling them TradFi, like I don't even think they know that term. I don't think they use that term, right? But I don't know. We just have to create a term for everything in this space. And then you were talking about the evolution of the community at the summits. I was curious what you think it'll look like in 2025.
Hopefully it goes from, if we had 30% DeFi and 70% TradFi in 2023, it kind of flips in a lot of ways. Not to say that there isn't always an incredible important part that crypto founders and the builders need to play, because that is like the cool factor. The suits don't want to just be surrounded by suits. They want to feel like they want
to be in it. Yeah. At least the ones who are at these events want to be in it.
Yeah, exactly. Like 2023, we had Boys Club. I don't know if you know Natasha and
yes,
Dina.
I do know Boys Club.
Podcasting at the events. We're like, we got to keep the cool factor, because that makes why we're doing this fun and interesting and different. So I think that we'll continue to see just more leaning in from TradFi, and then the role we'll play is making sure that we maintain that harmony and we maintain that balance, and we're putting the right pieces in place and bringing the right infrastructure into the room. And a big part of that is kind of that matchmaking. So right now, a lot of what the TradFi is looking for is custodians and exchanges and lending markets, interesting ways to create utility for those tokens. So from our side, as we look to bringing in strategic partners, we're very intentional around who we're tapping, so that we can say, here's the best, or here are some, options and ideas for potential chains that bring different use cases. And here are some ways that you can custody those assets. And here is the total ecosystem that you would need in order to really realize these benefits and start moving in the direction that we all want to go in.
Yeah, that makes a lot of sense. And I think a lot of times in crypto, we talk about like what Web3 can bring to the masses or TradFi or whatever sector we're like pointing to. But I'm also curious, like if there are any Web2 tactics that you think are important to integrate to kind of bring this to the masses and make it more scalable and accessible.
Yeah. I mean, interestingly, a lot of people ask me the difference between Web 2 and Web 3. A lot of the fundamentals are the same. So the importance of understanding your customer, creating like multi-channel strategies where you can reach people where they are in the process. So top of funnel content could be like the difference between Bitcoin and blockchain. And then further down the funnel is interesting ways that other asset managers have used the technology and the results that they've seen. And then further down the funnel is how it actually works and the technical processes and the walkthrough of it. So most of the content that's come out of crypto so far is that technical side, the very bottom of the funnel. So it's bringing that up. So a lot of the similarities are, or at least the areas of Web 2 that I'm bringing into Web 3 are that education, that understanding your customer, meeting them where they are, doing a lot of work to simplify complex topics. So a lot of it comes down to positioning and messaging and really selling, kind of taking an outside in approach rather than an inside out approach.
Yeah, that makes sense.
And then, the other thing was like that's worked really well is events. So I've always done a ton of events throughout my career. They've been very successful on the Web 2 side. And I was pleasantly surprised to see that I've never seen an industry where events are a more critical part of it than crypto, because so many people have that connectivity and that in-person experience.
Yeah, 100%.
So I guess the short answer is that I've seen more similarities than differences in terms of what has worked in Web 2 and what works for Web 3.
Okay.
And to caveat that, there's the more traditional crypto companies are selling into a more traditional crypto audience or a retail audience. There's quite a significant number of differences. But for us, since we are more B2B and institutional focused, a lot of that foundational strategy and work that goes into building a brand and creating a go-to-market holds true.
Mm-hmm. Yeah, no, that makes sense. And I'm really curious your thoughts on kind of what investors and asset managers want right now. Because I'm sure you're having hundreds of conversations. And I think the demand for these things has definitely shifted a lot from last year to this year, kind of going back to like what we were talking about before. And then I'm also curious, what don't they want? Like, what are things where they're like, we don't really care about that, but we really love this. You know what I mean?
Yeah. Yeah. So on the investor side, there's a couple different, time horizons and a couple different opportunities. So if we break it out to investors and then asset managers, investors, when they think about real world assets, it's kind of what I touched on at the beginning, where there's the like very long tail esoteric stuff that's very difficult to access. So that could go so far as like rare whiskey or watches, or they're tokenizing airspace in LA above the basketball. Yeah, it's interesting project, SkyTrade.
That is crazy. Okay.
There's like carbon credits have been a big push. So there's, tokenization of like farms in South America. So very, very difficult to access products. And these are cool because it's unique and it gives you something to talk about. We had Scottie Pippen from the Bulls. He tokenized his basketball. But he was at the RWA Summit about getting fractional
amazing.
Ownership. Yeah, so it's like fun and it's interesting. And that came right after Thanksgiving for me. And like, I talked about it with my family at Thanksgiving dinner, and they're like,
we know Scottie. Yeah.
Yeah, now I understand what you do. That's so cool. Wow. I'm like, hey guys.
You tokenize basketballs for a living, right?
Yeah. They're like, so how do I get the basketball? All right. What about the next Thanksgiving?
Yeah. But I think to your point, it creates this understanding in a mainstream audience though, right? And like if they can imagine it and visualize it in a way that like meets them where they are, suddenly it becomes more realistic, right? Remember trying to move your assets between chains, watching the minutes tick by, wondering if your transaction would make it? Yeah, we've all been there. But here's the thing. While other bridges feel like taking the scenic route, Across is your express lane. Base, Arbitrum, Optimism, boom, boom, boom. Your assets move between them faster than you could say cross-chain. Across isn't just another bridge. When Uniswap needed the fastest, most reliable way to move assets cross-chain, they chose Across. Now, millions of Uniswap users are swapping between chains without even thinking about it, because that's how it should be. Whether you're moving assets yourself or building the next big thing in crypto, Across makes cross-chain feel like the same chain. No more scenic routes, no more complexity, just 2-second transfers between chains. Ready to join the express lane? Head to across.to and experience what bridging should have been all along.
Exactly. Yeah. And it's just like, it's fun. It's interesting. It's trading cards. It's something that someone has a personal connection with. So that's the one side. And then the other side is where we have seen more significant growth in the last 2 years, and that's tokenized treasuries and fixed income products as we move up the yield curve and start to look at highly liquid, very stable yields. So both of those have staying power, and both of those are on the two ends of the spectrum, and we'll see the dots being connected in between with other products like private credit, like private equity, like commodities, and those have different investors with different interests. Right. So on the stable yields, what we're seeing is a lot of really large DAO treasuries, DeFi protocols. On stable coins, they want to have access to this very safe product where they're going to get a steady return. So might be 5% in T-bills, might be 6, 7, 8% in some of the other fixed income products we're looking at. But they can rely on the fact that it's either instant or T1, T2 redemption days. And it's a safe allocation of their portfolio. So as crypto markets are very volatile, things are going up and going down, they know that they have this access. We've had a lot of success with Dow Treasuries where they want to keep a certain allocation of their portfolio in real world assets just so that they have that stable return. And we're seeing even more success now with stable coins where they have a consumer facing product, but they want to offer yields. And to do that, they want to have RWAs as part of the collateral. So Maker and Dai has been an early adopter of that. And of course, the Grand Prix is, but now Mountain and M0 and Usual and Agora and a lot of these other stablecoin projects are having conversations with RWA offerings. And so that's the kind of B to B to C. So still not a lot of direct to consumer on the RWA side, but going through these partners who then offer it to the retail audience. And then on the more esoteric side, typically that's not a Dow Treasury. It's not an institution that's investing. That is more generally applicable to the retail audience where they have that passion and excitement.
Yeah.
So the asset manager side, what we're seeing is that historically there was this inverse selection bias where if they can't raise money off chain, they come on chain and they're trying to offer these products because it's the last resort. That luckily kind of got washed away with the last cycle. Then we started seeing more demand for the like general fixed income products. We started to see more asset managers come in. So there was greater supply of the products available, but we didn't really see that demand. And then with the last bear market, the rise of rates on the treasury side, stable coins starting to be a strong distribution partner for these asset managers, that's where we really started to see the greater pickup from the asset manager side. Then the folks that we're talking to right now are looking at this opportunity as a way to access on-chain capital. So $200 billion in stable coins. There's this opportunity to start offering yields to those holders, which is kind of the shorter time horizon, which is this new liquidity pool. But then the longer time horizon is now that we're, funding it with the on-chain capital opportunity, how are we integrating this technology into our system overall? How are we removing intermediaries, improving processes, increasing efficiency, saving costs, and then ultimately transforming the way in which we run our fund? So the on-chain capital today kind of funds that innovation and that build out and that project development. But the long game is really to tokenize the back office operations of an on-chain fund.
Yeah. I was going to ask, what ways do you think is the best way to integrate this technology long term so that it is kind of just a part of the traditional financial world and no longer like a separation between like TradFi and DeFi or TradFi and going on chain or anything in between? And it's just suddenly like, this is finance. This is the future of it.
Yeah. Yeah, that's it. Like when we drop the on-chain finance and it's just finance.
Yeah, there we go.
Joke when
we could all retire.
That's love it. This is just finance. There's our new
just finance. Yeah, just finance. Yeah.
Yeah, exactly. That's what we're working towards, and it's incremental improvement that happens over a long period of time. So there's something like 16 intermediaries involved in a securitization, and that's transfer agent and just, various people and processes and projects that are involved in every single step of the way. And what we see is that over time, they get, either replaced or removed or enhanced or automated or putting different technology in. And it goes from 16 to 14 to 10 to 12, and you start shaving basis points cost throughout every step of the way. So I don't think it's going to be one day we wake up and it's completely transformed. It's a evolution of the various different service providers and pieces of the puzzle falling into place. and the technology becoming more comprehensive, becoming more institutional, becoming more integrated into the fund management process, where then in the end, we realize that holistically, we've been able to achieve that just finance. BlackRock said, I know I've mentioned BlackRock a lot so far in this episode, but one thing they said that stuck out to me was that when asked how many funds they'll tokenize by 2030, they said something like, it will either be all of them or none of them. So that the asset managers are making a bet. We as technology providers are making a bet that this will be a transformative technology that will become integrated into every single part of the financial system. And that's the vision that we have. And that's what we're all working towards helping TradFi realize.
Yeah. Is there anything you think that shouldn't be tokenized?
I mean, no offense to Scottie Pippen, but I don't know if having a fractional
of his basketball
ownership of a basketball is the most has the most fundamentals. So I think it does create interesting, it's a different use case. It's a community that's being built, and it's not a financial instrument that can be utilized in different ways across the on-chain capital market.
Yeah.
So I think there's just different mindsets that you have for tokenization, where we're talking about fixed income products, and we're talking about fixed income products can create composability and on-chain lending and really interesting utility in DeFi. Or when we're talking about private credit and bringing access to these products to a retail audience and democratizing really interesting investment opportunities to those that haven't previously had access, or real estate and creating liquidity in secondary markets. I think that everything could be tokenized. It's just why you're tokenizing it. So is it for that community appeal and that excitement and that hype? That's okay, but it isn't as strong of a financial use case as some of these other areas where there can be significant either new utility, new liquidity, new accessibility, just new value that comes out of the tokenization process.
Yeah, I agree. Everything can be tokenized, but it's up to the market to decide whether or not it should be.
Yeah.
And whether or not there is true value behind it. And I think we could see that as a result of like capital inflows and outflows and everything, right?
Yeah, I mean, the interesting new, not to bring up the meme coin culture, which is pretty far from the word, but
sure.
A lot of like with the Trump coin and the Melania coin, there's like this tokenization of value. So there's a new world that's being opened around celebrities and what if Taylor Swift tokenized her brand and created a stable coin, and her users could participate in like a fan account where she creates community and she goes direct to consumers. Right. So I do think there's some interesting threads that can be pulled and areas that can still be explored that are more on the general culture side. And the catalyst could be what hasn't worked in some of the early launches that we've seen, but creating the mindset where you start to open up possibilities of other ways that you could start thinking about this technology.
Yeah. I think if Taylor Swift started tokenizing things, we'd see mass adoption immediately. They wouldn't even care. They'd just be like, give it to me.
I know. We need to talk about onboarding the next billion users and like, there we go.
Yeah.
So if you have any connections to Taylor Swift, we have a product you might be interested in.
There we go. The Taylor Swift agents. Hit her up.
Exactly.
We've talked a lot about tokenization and real world assets, and I feel like a lot of times people bucket them together. Do you think that is fair? And if not, how do you differentiate the two and separate them, especially when like you're educating people? Like, hey, this is like a part of it, but maybe not. Like, you tell us what you think.
Yeah, so what we've seen is that tokenization is the process of creating the digital representation of that traditional asset on chain. So that is oftentimes what we're talking to the traditional finance folks about, is how do we tokenize this product? How do we tokenize this fund? how do we use that tokenization as the bridge from going off-chain to on-chain? Real-world assets is the term that DeFi created and has spearheaded that we think about as what then? So now that that asset is tokenized, what can you do with it? Can you use it as collateral in a lending market? Can you use it as an exchange? Can you lever it? Can you loop it? Can you create more utility around that asset on chain? So that's the slight nuance and differentiation of how we think about those two terms. Ultimately, I do think that they'll become one because, as I mentioned earlier, real world assets, RWA doesn't really fly with the traditional markets. And tokenization as a concept seems to click with TradFi faster, where they can understand that process. To your point earlier around digital finance, a lot of the folks I've been talking to, they say, oh, it's digitizing it. So even tokenization can be a little too niche for them. The idea of creating a digital representation, that's easy to wrap your head around and understand.
Yeah, I agree with that 100%. I think watered down terms tend to do better sometimes. I think there's also a need for technical terms, don't get me wrong, but when you're trying to educate someone and you throw 50 different acronyms at them, you're going to lose them after the first one or two. So
yeah, and that's one of the benefits of me being relatively new to crypto is I still remember the early days where I didn't know any of the acronyms. And I actually, just for fun the other day, I looked back at my notes when I started and I had a 4-page document of every single acronym. Like, wow, now I take for granted that I know all these things, but before joining Web3 and crypto, they were all new. So it's a good reminder for me when we're thinking about marketing to the masses and making this more accessible is even those basic terms and functionality that we all take for granted now because we use it every day, even those are still new to most of the people that we're talking to.
100%. You got to get fresh eyes looking at these things. People who don't even know what Ethereum is. Literally. Yeah. I remember when I first learned about the term TradFi. I was like, nobody says that. It's not a thing. And then a week later, I was like, oh shit, this is becoming a thing. That's actually a term. And that was years ago. But I don't think people outside the industry really use that term. I don't think my father in finance uses that term. But I could be wrong. I got to go spend a day on the trading floor and see what people are saying.
My husband is in finance, so he's
Does he say it?
No, not
okay,
at all.
So it's just us.
Absolutely not at all. It's just us. Yeah.
Damn.
So even T-bills. He's like, nobody says T-bills. They say treasury bills. I'm like, oh, interesting. And granted, he's in a different sliver, so I gotta
Yeah.
based on who you talk to and where they are in their education journey. But he's definitely a good sounding board for me.
Did they say real world assets? It's just assets, right? They're like, what do you mean real world? It almost makes it sound fake. It's like, what's as opposed to what? Yeah.
Exactly. Is crypto the real world? What are we doing right now?
We are in the digital world. That's the metaverse. Full circle. No, I'm kidding.
There we go.
There we go. All right, Bhaji, what else do you think needs to be done? What are the technical hurdles, the regulatory hurdles? Because it sounds like everything is, seems pretty good. But obviously, there's still some things that need to be ironed out, right? So what is your mindset there?
So there's 3 things. There's the technical hurdles, the regulatory hurdles, and then the actual demand drivers. On the technical side, a couple of the big pieces I mentioned earlier are custodians to actually custody these real world assets. Exchanges where you can trade them, where you can create more utility for them. Those are areas where we have really strong players already in DeFi, and we have really strong players in TradFi, and there needs to be players that bridge both and can manage both. And we need to remove those 2 silos where they're not 2 different types of businesses serving 2 different customers, but we can have that interaction that spans across on-chain and off-chain finance.
Right.
So that's the infrastructure side, the technical side. On the regulatory side, we are seeing a lot of really positive signals come from DC. We're seeing really strong people get put into place. We're having meaningful conversations. it seems we're moving in the right direction, but nothing has actually changed yet. So we need to see that transition into saying the right things and moving in the right area and bringing the right people in place towards actually seeing some of this regulatory clarity and seeing some of these process and systems get put into place, which I'm very confident will happen. It's just starting to prove that out. And then on the supply demand side, there still is a differential between supply and demand. So I mentioned Maker as a really strong demand driver. There's also, we saw success of Usual growing to a few $1 billion very quickly. They were backed by real world assets. So there have been interesting drivers on the supply side or on the demand side, but there still very much so is more supply than demand. So what we see and will need to see there is more on-chain capital being allocated towards real world assets, but even more importantly, more capital coming on chain. So starting to see institutional allocators that are interested in on-ramping to crypto and getting access to some of these products. And that will happen either because they want access to products they didn't have before, so some of that esoteric stuff, or because they have greater utility and new interesting use cases that can happen on chain that doesn't happen in traditional markets. So all three of those areas are critically important to any sort of inflection point that we're going to see in the industry. But what's really exciting is that all three of those areas have so many smart folks and companies that are focused on building there, and progress is happening at a faster rate than we've ever seen.
Yeah, amazing. What do you think is going to be the outcome for maybe the on-chain economy this year? How big is it going to become?
That's the question I always love to ask at the RWA Summit.
You ask other people that? What are the answers you hear?
Yeah. Oh my gosh, everything.
Yeah.
Some people think it's going to be, well, if you look at some of the like analyst reports, McKinsey says it's going to be 3 trillion by 2030. BCG says it's going to be 30 trillion by 2030. So definitely a number with a T.
There we go.
It's a matter of how many T's. But I mean, if we look at like stable coins as a really strong first indicator, especially considering that a lot of these stable coins want RWA collateral, we're right now at 200 billion. And one of the strongest movements we've seen coming out of DC is the stablecoin bill. And a lot of the interest that we're seeing from banks and fintechs and traditional players is drive to have a stablecoin strategy. So the bullish take is every bank by the end of 2025 will have a stablecoin strategy. So then if you think about a portion of stablecoins being one-to-one backed by the dollar, a portion and used as a payment mechanism, and then a portion of stablecoins being yield bearing, then I think that will be the first soonest driver for continued growth of the real world asset space overall. So I don't have the exact number, but I'm feeling very confident that this is the year that we start to see real meaningful growth in a way that we never have.
All right. We're going to have to wait and see then. Aji,
What
do I think? Oh, I'm just the host.
That's my role.
Yeah. And that's time. No. But to actually wrap things up, I always ask my guests, can you leave us with a piece of advice, something that you've carried with you throughout your time in the space?
A piece of advice for crypto?
Yeah.
My piece of advice is that, and this is what I tell myself, there are the smartest people in this space as I've ever seen anywhere else. It's attracted the true builders, the true innovators, the visionaries who want to absolutely change the world. And it feels like as fast as we learn, there's always so much more to learn because of the rate of innovation and the rate of change and the intelligence level of the people doing it with us. So whenever I'm feeling like it's just incredibly overwhelming and everyone's 10,000 times smarter than me, I go back to the street and I talk to people outside of the industry, and I realize how much more we all know than the vast majority of the rest of the world still. So it's a good reminder to balance that line of everyone in crypto is so incredibly smart, and we're all here because we're all building for the future and so excited about that. And we still have so much work to do to bring everyone else into the world that we operate in. And from their perspective, this is like a complete transformation of anything they've ever experienced and anything they've ever seen. Yeah. So I guess the short advice there is it's all about perspective of who you're talking to and the expertise, the insight, and the value that you bring.
Yeah, no, I love that. And I 100% agree with you on that, especially when I go and talk to people outside of the space, because it's night and day.
It's good for the ego. It's good for the ego.
Yes, 100%. Amazing. Well, thank you so much for coming on, and congrats again on the new role as CEO.
Thank you so much. This was a great conversation.
Yeah, we'll do it again.